Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start the problems on capital and revenue expenditure. Last video I have started chapter number 3 and I have explained you in detail what is revenue expenditure, what is capital expenditure, what are the differences, how to identify whether an expenditure is capital or revenue. All these things I have already explained. So if you have not watched the last video, go to the playlist of my channel. Select the subject Accounting for CA Foundation. Watch the first video. Be clear about the concept of capital and revenue expenditure and capital and revenue receipts. Now in this video, I'm going to start the problems on capital and revenue expenditure. These problems are very important in examination. They may be asked, and if you watch the video with full concentration, all the points you can be able to remember and you can easily write in examination with full confidence. So before starting, take the screenshot of the points which I have written on the board, then I'll explain. Now, first question. The first question is true or false. We have to decide each sentence whether the sentence is true or false. The first sentence, the nature of business is not an important criteria in separating an expenditure between capital and revenue. What it is saying is, in order to decide whether an expenditure is capital expenditure or revenue expenditure, there is no need to consider the nature of the business. But it's absolutely false. Because in order to decide whether an expenditure is revenue or capital, we have to see the nature of the business. It very much depends on the nature of business. For example, a trader's business is furniture business. He is buying the furniture and selling the furniture. For him, furniture purchased is a revenue expenditure. Whatever furniture purchased is a revenue expenditure because his activity is buying furniture, selling furniture. But for other businesses, furniture is a capital expenditure because furniture is an asset which is used in the business. So this furniture will be shown in the balance sheet, furniture. So ultimately, the deciding factor whether an item is a capital expenditure or revenue expenditure, it depends on the nature of the business. Second one, expenditure incurred for major repair of the asset so as to increase its productive capacity is a revenue expenditure. Absolutely not. When a major repair is done on a machine, what will happen? The earning capacity of the machine will increase. The efficiency of the machine will increase by incurring major repair. So any major repair done on the machine will be treated as a capital expenditure. Here it is saying it is treated as a revenue expenditure. So it is false. Normal repairs and maintenance done, that will be a revenue. But major repair done on the machine will be a capital expenditure because it will give enduring benefit in future. Amount spent as lawyer's fee to defend a suit claiming that the firm's factory site belonged to the plaintiff's land is capital expenditure. Now see here, this factory is having business is having a factory site. On that factory site, some other person has put a court case. So to defend that, the business has incurred legal expenses. To defend our property, to defend the factory site, legal expenses are paid. It is not a capital expenditure. We are saying it is a capital expenditure. Wrong. It is a revenue expenditure. The statement is false. Why revenue expenditure? By incurring this legal expenses, will the efficiency, will the profitability in future will increase? No. Presently, we are owning the land. Somebody had put case against us. So it is our land. So even by winning also, our earning capacity will not increase in future. So these legal expenses will not give any enduring benefit in future, nor it will increase the earning capacity of the land. The earning capacity will remain same. So the expenditure incurred on legal expenses. That is a revenue expenditure. Next comes amount spent for replacement of worn out part of the machine is a capital expenditure. Wrong. Any overhaul, any expenditure incurred to replace the worn out part of the machine is a maintenance cost. It is the normal repairing cost. So any worn out part is replaced, it is just to maintain the machine, maintain the efficiency of the machine. It will not increase the efficiency of the machine. It will be maintained. So it is only a maintenance cost, which is a revenue expenditure. Here it is saying capital expenditure. So again it is false. Right? Now, legal expense to acquire property is a capital expenditure. Absolutely true. See here. When a property is purchased, some legal expenditure has to be incurred on registration, on getting the ownership right. So to get to the ownership right, we are incurring some legal expenses. So whatever legal expenses incurred, that should be capitalized in the property. Example, a building is purchased for 50 lakh. To purchase the ownership, to get the ownership of that building, 5 lakh rupees legal expenses are incurred. So now this 5 lakh rupees legal expenses will be added to the cost of the building. Now building cost will be 55 lakh. So legal expenses incurred to acquire the property is a capital expenditure. True. Next, amount spent for the construction of temporary huts which were necessary for construction of cinema house and were demolished when the cinema house was ready is capital expenditure. It's right. Yes, true. See here, when constructing the cinema house, workers are required. The workers will stay in temporary huts. So these temporary huts are made by incurring some expenditure in order to construct the cinema house. Without incurring the expenditure on huts, it would not be possible to construct the cinema house. So the expenditure incurred on making this temporary hut is a capital expenditure and it should be added to the cost of the cinema house. So it's a capital expenditure. It is true. Next, overhaul expenses of second-hand machinery purchased are revenue expenditure. It is false. See, overhaul expenses incurred on second-hand machinery purchased should be capitalized. When second-hand machine is purchased, it is assumed that it is not in a workable condition. Some overhauling has to be done. If we do this overhauling, then this second-hand machinery efficiency will increase. We can be able to get more benefit, enduring benefit in the future. So any overhaul expenditure incurred on purchasing a second-hand machine should be capitalized. It should be added to the cost of the machine. It's a capital expenditure. But here it is saying revenue expenditure. It's a false. Money spent to reduce working expenses is revenue expenditure. Sometimes, in order to reduce the revenue expenditure of future, now we are incurring some expenditure. So any expenditure incurred which reduces the working expenses in future is a capital expenditure. Because by incurring right now, we will get the benefit in future. In future, the cost will decrease. When cost decreases, what will happen? The profitability will increase. So by incurring this money spent to reduce working capital expenses, we are getting enduring benefit in future. So it's a capital expenditure. Here it is saying revenue expenditure. Wrong, false. It is a capital expenditure. Next, expenses incurred on the repairs and whitewashing for the first time on purchase of an old building are revenue expenditure. Just now I told you overhauling. First time when an old building is purchased, it is required to make some overhauling or whitewashing or some repairing. So any repairs or whitewashing or overhauling first time when we purchase an old building is a capital expenditure. It should be added to the cost of the building because it will increase the working efficiency of the asset. That means it will become a workable and a usable form. The old building is not in a usable form until and unless we do some repair, we do some whitewashing, etc. So amount spent on whitewashing for the first time on purchasing an old machine is a capital expenditure. Here it is saying revenue expenditure, so it is false. In examination, you should not simply write down false or true. You should give some explanation in 2-3 lines. What I am saying, what I am explaining. So always while watching the video, keep a notebook, calculator, pen ready. When I say something important, immediately note it down. Make it a habit of making a running notes. Whatever I am saying, immediately you write it down. Then only you can be able to remember for the long time, and also you will not forget before examination. Now, expenses in connection with obtaining a license for running the cinema is capital expenditure. Yes, true. Without obtaining a license, the business cannot start the cinema hall. So for the purpose of running the cinema, license is required. So this license expenditure is a capital expenditure. It's a capital expenditure, so it is true. Over a period of time, we can write it off. In future, the license expenditure can be written off. That's all. So these 10 questions are true and or false. Now we are coming to state with reasons whether the following are capital or revenue expenditure. So here's few points are given. You have to decide whether it is capital expenditure or revenue expenditure with explanation. You should not write simply it is revenue expenditure, it is capital expenditure. You should give the explanation. First one, expenses incurred in connection with obtaining a license for starting the factory, 10,000. So to start the factory, a license is required. Without license, factory could not have been started. So expenditure incurred to start the factory, to get the license, is a capital expenditure. This 10,000 rupees is a capital expenditure, because without incurring this 10,000 rupees, the business could not have been started. Over a period of time, we can amortize this 10,000 rupees. But right now, we have to treat it as a capital expenditure. Capital expenditure, right? Next one. Rupees 1,000 paid for the removal of inventory to a new site. Inventory is moved from one place to another place. Expenditure is incurred 1,000 rupees. Now see, by moving the inventory from one place to another place, will it give enduring benefit in future? No. Will the value of inventory increase? No. The value of inventory will remain same. The value of inventory remains same, and there is no enduring benefit in future. So we have to treat this 1,000 rupees as a revenue expenditure to shift the inventory from one site to another site. So it is a revenue expenditure. Next, rings and pistons of an engine were changed at a cost of rupees 5,000 to get fuel efficiency. So we are having a machine. In order to increase the efficiency of the machine, fuel efficiency of the machine, some rings and pistons are changed by incurring a cost of 5,000. Now we have to see whether by incurring this 5,000 rupees, it will increase the earning capacity in future. Yes, of course, because fuel efficiency is there. Fuel efficiency means our expenditure will get reduced in future. When expenditure is reduced, our profitability will increase. So this expenditure 5,000 on rings and pistons is a capital expenditure because it will give more benefit in future. Capital expenditure. Right? Next one. Money paid to Mahanagar Telephone Nigam Limited, MTNL, rupees 8,000 for installing telephone in the office. So for installing telephone in the office, some deposit is being made to telephone department. MTNL is a telephone department. So this deposit actually is not an expenditure. It can be treated as a capital expenditure, but over a period of time, this deposit can be set off against the telephone bills. Next, a factory shed was constructed at a cost of 1 lakh rupees. This one only, yes. A factory shed was constructed at a cost of 1 lakh rupees. A sum of 5,000 had been incurred in construction of temporary huts for storing building material. Just now we have discussed that in order to construct the building, factory shed, in order to construct the factory shed, some temporary huts were made in order to store the material. So expenditure incurred on temporary hut is a capital expenditure, because without incurring that expenditure, we could not have been constructed the factory shed. It is incidental. The expenditure incurred on factory shed, incurred on huts is incidental to the expenditure on factory shed. So this expenditure on temporary hut should be capitalized. It should be added to the cost of the factory shed. So it is a capital expenditure. It's a capital expenditure. Right? Next question. Best Tech Solutions. One company is there, Best Tech Solution, buys and sells computer as part of its business. The activity, the normal activity of the business is buying the computers and selling the computers. It purchased 20 computers for resale to its customers. Cost of each computer is 20,000. So purchased 20 computers, each computer costs 20,000. So 20,000 into 20, you will get 4 lakh rupees income. Now tell me, this 4 lakh rupees is capital expenditure or revenue expenditure? It is revenue expenditure, because the activity of the business is buying the computer for selling. So expenditure incurred on buying the computers 4 lakh rupees, and these computers have to be sold in future. So this 4 lakh rupees incurred is a revenue expenditure. Now it also purchased a computer costing 24,000 for its accountant to be able to maintain the accounting records and printing of invoices. So apart from the 20 computers, this company has purchased one more computer for 24,000 for the purpose of using it in the business, not for selling. The company accountant needs a computer for making the invoices, for recording the transactions. So this 24,000 rupees computer purchased is a capital expenditure, because by purchasing this computer for office use, it will give benefit for a long period of time. So in this problem, you should write down on the answer here, the computers purchased for resale, 20,000 into 20. 20,000 into 20, 4 lakh rupees should be treated as a revenue expenditure. Whereas the expenditure incurred on purchasing the computer, 24,000 rupees for official use, not for resale, is a capital expenditure. That's it. Now, state whether with reasons whether the below items relating to business of AB Limited are capital or revenue receipts. Some 4 points are given. Each point we have to decide whether each item is a capital receipt or a revenue receipt. That's what we have to decide. Now, first one, a machine with a book value of 10 lakh is sold for rupees 12 lakh. The sale proceed received on selling the fixed asset is a capital receipt. So here 10 lakh rupees of machine was there, but it was sold for 12 lakh. So we should write this 12 lakh rupees received is a capital receipt, which includes a profit of 2 lakh. The profit is 2 lakh. Next, premium outstanding of 1 lakh rupees received on issue shares. Premium outstanding of 1 lakh received on issue of shares. The company has issued the shares at a premium, and the company received the premium money from the shareholders. So this premium receipt is a capital receipt, because every year, every day, shares were not issued. It's a non-recurring item. It will not repeat again and again. So any receipt which is non-recurring is a capital receipt. The share premium received is a non-recurring receipt. It's a capital receipt. An amount of 20,000 received from goods sold in cash. When goods are sold and received the cash, it's the recurring activity. In the ordinary course of business, a business will sell the goods. Every now and then the goods are sold and receives cash. It's a revenue receipt. It's a revenue receipt. Last one. An amount of rupees 5 lakh received on the maturity of fixed deposit from bank. Also, an interest of 40,000 was received in addition to the maturity amount of the fixed deposit. So, a business has received the fixed deposit on maturity. So, in earlier years, the business has deposited some 5 lakh rupees in the bank as a fixed deposit. On maturity, that 5 lakh rupees is received. So, it is a capital receipt. So, amount received on maturity of fixed deposit is a non-recurring. It will not again and again be received. It is not the ordinary course of activity. So, this amount of 5 lakh rupees is a capital receipt. But along with that, 40,000 interest is also received. So, this interest received is a revenue receipt. Because interest regularly will be received. Every year interest is received. So, interest received on bank deposit is a revenue receipt. Maturity amount received of the fixed deposit is a capital receipt. That's all. So, in this video, so many problems I have explained on capital and revenue expenditure. Some more problems are there that will be continued in the next video. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed to my channel. Buy the super thanks which is given below my video. Inshallah, we'll continue the problems in the next video.